Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you a little bit of an early daily recap as it's a really quiet day in the market. This morning I talked about how it was a ghost town on the trading floor. Now it's really a ghost town. I think there was one or two people out there when I just walked through, but that's just evidence of how slow this tape is right now. I think a lot of people on the virtual trading floor have started to take an early weekend as well. I think that's a sound decision given the type of action that we're seeing and the fact that this is a very headline-driven tape. And all anybody's really doing right now is speculating on the Syria situation. And you've had a couple different news conferences today that have moved the markets in regards to the Syria issues. You had John Kerry come on and really give a powerful, strongly worded speech about the fact that the United States has strong evidence. They're very confident that a chemical weapons attack took place. They intercepted communications from the regime planning the attack, allegedly. And then there's also obviously the death toll and the nature of the deaths in Syria would point to the idea of a chemical attack. So there does seem to be strong evidence, and the U.S. is not backing down from its assertion that it is confident that a chemical weapons attack took place, despite the fact that the UN still says it needs to gather more information. NATO is not on board with a potential strike yet in Syria. So the United States has sort of painted itself into a little bit of a corner here, because the president sort of was tough talking about this situation. He was talking about how any chemical weapons attack in Syria would be crossing a red line and would incur serious consequences. I think those words were a little bit stronger than I think some of his policy advisors might have wanted him to use a few weeks back. But like I said, it's painted himself into a little bit of a corner where now if the United States doesn't act, it's potentially going to be perceived as weak. But if it does act, it's entering a potential conflict that has not been sanctioned by Congress. It's not part of a NATO coalition act, and they'd really be going it alone and sparking another conflict in the Middle East that you don't know how that's going to result. And one thing Obama is talking right now, actually, he had a news conference that wasn't actually televised on live TV. They declined requests for live coverage of this event, but a few quotes have been coming out of it. A few of them are saying that Obama's saying there could be limited action in Syria, but no open-ended commitment. But it's hard to think how how successful that could be without a full commitment there. And that's one of the things he's going to have to weigh. He did say there's been no final decision on whether or not to do strikes in Syria. But like I said, Secretary of State John Kerry's wording was very strong and definitely gave an indication that the United States will act potentially as soon as Saturday night, or some of the reports that are coming out. But enough of me being a political advisor. I think it's important to be abreast of these issues. Yes, we're technical traders. Price action is king. But I also think it's worthwhile to be in touch with the news and be in touch with the headlines and see how they're affecting the market. Initially, when John Kerry came out with that tough talk, the market went down. They were perceiving it the way I was just describing, as evidence that we will move on an attack in Syria. But then it bounced back, and we're well off of the lows of the day. So we take a look at the chart of the spiders now that rant is over by me, or that briefing. And you can see, like I said, we're well off the lows of the day. We came close to breaking this pivot low here, but we've bounced back above yesterday's low. So nothing really to write home about in regards to today's action. Just it could end up being an inside type of day, even though we did break briefly below yesterday's low. It was sort of a quick trigger snap move that was recovered based on those headlines, probably some algos pinging some keywords and headlines, but nothing really to write home about today. Quiet action like we expected. I think it's a sign that no one's really looking to put risk on in either direction at this point. If I were to be putting risk on, I would rather put it on short right now because of the potential for explosive headlines, no pun intended, this weekend. So I don't think there's a lot of people looking to get involved in new long positions today, for sure. And just going over a few of the tech stocks I talked about this morning, there's really nothing to mention, but we'll just do a quick fire of the charts. We'll go to Tesla, quiet day there in a usually volatile stock. Facebook, a little bit of a tail. It opened higher today and was really strong early, but has closed off the highs, well off the highs. So maybe a sign that rest is due with a little bit of a push-through failure there in Facebook. Take a look at Apple. Apple, a little bit weak. We have that product announcement coming up on September 10th, so doesn't seem to be too much buzz about it right now. It's pretty much expected to be the new iPhone, so people know what that news is. The level we'll be watching here is the 21-day moving average. Netflix, a little bit weak today, but overall, how can you really quibble with anything going on with Netflix? The 8-day moving average will be the level that some traders might look to buy a dip, a shallow dip, and then if we get a deeper correction, maybe a retest of this prior breakout level, which would probably see the 21-day moving average catch up to that level. So that could be a more compelling buy area right now for Netflix. GMCR, also weak today, even weaker than Netflix, coming down near its 8-day now. You could see a retest of its prior breakout level, which also could coincide with its 21-day, given a few more days for that moving average to continue to curl up. Baidu, we'll take a look at that one. Baidu also weak. So some of these tech stocks weakening a little bit. Maybe people taking some profits after some nice moves in these stocks as people want to pare down risk heading into the weekend. That's all I would really make of this. And then we'll take a look at LinkedIn, the final one of this group that we talked about. And LinkedIn is just hanging in above the 8-day. Like I said this morning, this is one that's not quite as extended in the short term as some of the other leading tech names. So not that overbought sell-off like we're seeing maybe in some of those other names, but nothing really, like I talked about with the market, nothing to write home about or cause major concern. Maybe just some risk off a little bit into this weekend, a long weekend with the potential for military strikes. So that's all I'd really make of that. I mean, take a look at gold and oil are the two things that people are really watching regarding this serious stuff. And gold continues to be weak after that gap, and it held up for a couple days, but felt a little bit tired, and it's continued to the downside. So the GLD is down here at its 8-day moving average now. That 8-day is starting to curl down a little bit after 3 straight down days, or I guess 2 straight down days. We had a red session on Wednesday, but gold is one that I didn't, to be honest, I didn't really understand why it was going up. You don't argue with price action, you don't fight it, but this move didn't make a lot of sense to me considering expectations for September Fed QE tapering. So I expect to see gold have more downside from here. I really do. USO is a United States oil fund. It's a way to track oil, and oil initially popped a little bit on that news conference by John Kerry where it was very strongly worded and gave suggestions that we could move on military strikes in Syria as the consequence for their chemical attack. But then it's faded again off those highs of the day, and it's sort of in the middle of its range, putting in a little bit of a doji. It's a candlestick of indecision, so I think there's more data needed, more clarity on the Syria situation before we get another move in oil. You could see it sell off if, for some reason we have a U-turn and President Obama decides not to conduct strikes or decides to poll Congress on the issue, which they would most certainly vote against it. Most of the American people are against war in Syria, so this would be a very aggressive, different type of move than we've seen from someone like President Obama, who he won the Nobel Peace Prize before even doing anything. So a little bit, I guess you could say it'd be a little bit surprising to see him take such bold action in the Middle East. But like I said, he sort of painted himself a little bit into a corner with those strong words. And if he doesn't act now, he could come off very weak in the global sphere and could hurt our credibility a little bit in terms of trying to prevent things like this from happening in the future. But like I said, headline-driven tape, holiday weekend coming up. This is not a day to put new risk on. Next week, we could get more clarity on the Syria situation. We'll be getting closer to that September Fed rate decision. And those are the two big drivers in the market right now. And they sort of have everybody in wait-and-see mode, neutral mode. And I think that's the way you should be until we get a little bit more clarity, because I think the risk side of risk-reward right now is skewed a lot more heavily than the reward side. But if I were going to lean one way, it would be to the downside with the threat of the Syria stuff this weekend. But this has been John Darcy here for your daily recap. We'll see you out here on Tuesday morning. Everybody enjoy their Labor Day weekend. Hopefully I'll get out, play some golf, enjoy the outdoors. I'm sticking around New York, but whatever you guys do to have fun, I hope you enjoy it. And we'll see you out here next week.